Hello everyone. We are just a week short of the first MPC announcement for FY 25-26. Let me share with you the key highlights for the month of Feb 25. Active RBI intervention led to core liquidity surplus of about 1 lakh crore. Headline CPI fell to 3.61. However, the core inflation inched up towards 4%. Globally, the situation remains volatile, with the 10-year US Treasuries oscillating between 420 to 440. However, it closed at about 4.18. US markets were pricing in 2 cuts at the beginning of the month. However, now they've started pricing in 3 cuts going forward for calendar year 25. This effectively means the probability of recession in the US has gone up. The dollar index corrected to 104.20 and the INR also gained strength to about 85.50. RBI FX reserves stood at $658 billion and the Brent crude oil prices were trading at $73 a barrel. And the Indian 10-year bond yields for the month closed at 6.57 and the 30-year bond closed at 692. As highlighted in the last call, the real driver seems to be the liquidity. That can be seen very clearly with liquidity infusion. We saw bond yields easing, gaining momentum. RBI has announced 80,000 crore worth of OMOs ahead of its MPC decision, which augurs well for the policy. We expect a 25 basis point cut and an outside chance for a change of stance from neutral to accommodative in the policy. We remain constructive on duration. However, the investors may choose funds in line with their investment horizon. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.